Good evening. Hope you all had a great day. Today the market wavered throughout the day, but ultimately sold off late and ended in the red. The tech-heavy index had the worst day, as it fell 0.57%. The S&P followed with a loss of 0.44%. The Dow had the best day, but still managed to have a loss of 0.31%. Tech giant and largest company in the world, Apple, became the first publicly traded U.S. firm to surpass the distinction of $2 trillion in market cap. Apple recently passed the $1 trillion market cap in the month of August of 2018. In the past quarter, the company had nearly $60 billion in revenue, which represented top-line growth of 11%, as they have benefited largely from growth in the services segment, which includes Apple Music, their cloud service, and recently started Apple Gaming and Apple TV. On top of this, they are still seeing double-digit growth in the product segment of the company, largely driven by the iPhone, and recent addition, Apple Watch. To put their size into context, Apple is now larger than the whole Russell 2000 index of small-cap firms. On top of this, Apple is now roughly larger than Visa, Johnson & Johnson, Walmart, Procter & Gamble, PayPal, and Netflix combined. In a seemingly never-ending disaster, Boeing has finally received orders for the 737 MAX plane, which is something that has not been done since November. The 737 MAX line of planes have been out of service since March of 2019, after they experienced 2 crashes. Regardless, customer cancellations have outpaced new sales in the past 6 months due to the grounding of the planes and low demand of airplane travel. Shares of Boeing still remain down around 47% on the year. The Federal Reserve's latest meeting was revealed today. Notably, the Federal Open Market Committee expressed concern about the future of the economy, noting that the virus seems like it will continue to grow and may potentially pose dangers to the financial system. At the July 28th through 29th meeting, the members voted to keep short-term interest rates near zero as the economy remains below pre-pandemic levels. These levels look to continue until they're, quote, confident that the economy has weathered recent events and is on track to achieve the committee's maximum employment and price stability goals, end quote. Officials at the meeting, quote, agreed that the ongoing public health crisis would weigh heavily on economic activity, employment, and inflation in the near term and was posing considerable risks to the economic outlook over the medium term, end quote. Powell and the other members agreed that fiscal help from Congress is needed. Comments further indicated that while members are in favor of adding clarity to their expectations for when they will hike rates again, they appear to reject the likelihood of using bond purchases to control yields on government bonds. Fed officials repeatedly have said banks and related institutions are in generally strong shape. However, committee members at the meeting said they are worried whether that might change if the virus spread persists, and quote, more adverse, end quote, scenarios about the future potentially taking hold. Officials also expressed worry about burgeoning levels of public debt. This debt has coincided with a rush to market treasuries and is raising concerns that the high level of issuance, quote, could have implications for market functioning, end quote. The minutes indicated they are preparing to wrap up a year-long review by adopting a long-term approach of making up for periods of low inflation by seeking subsequent periods of somewhat higher inflation. The primary vehicle for the Fed to make these changes would be to amend a statement of longer-run goals and policy strategy, which was first adopted in 2012, when the central bank established a formal 2% inflation goal. Inflation has generally run below the target, encouraging officials to take a more relaxed view toward price pressures. The Fed's next meeting is scheduled for September 15th through September 16th. Every sector was hurt today, as they all ended in the red. Oil and gas had the worst day by far, as the sector fell more than 1.1%. Consumer services were also largely affected, with a loss around 0.9%. A multitude of other sectors experienced a sell-off of around 0.6%. On top of this, all different classifications of stocks were in the red. Seemingly no one was spared today, but large and mid-cap growth were hurt the most. The biggest gainer in the S&P 500 was retail giant Target. This move comes after their earnings, which we will cover in a few minutes. The other winner of the day was Freeport-McMoRan, which is a mining company that owns reserves of copper, gold, and molybdenum. Shares rose 3.61% after Citi increased their forecasted price per ton on copper. They cited progress on coronavirus treatments, U.S. policy easing, and sustained strength in China's economy as a catalyst for the price growth. The largest loser happened to be Jack Henry & Associates, which is a payment processing technology company. Shares fell a horrid 12.87% on the day after their earnings report, which came in essentially in line with estimates. However, the company did forecast earnings that were lower than consensus estimates. The other loser was TJX Companies. As with Target, this move comes after their quarterly earnings, which we'll cover in the next segment. Getting into earnings, we'll start off with Target, ticker symbol TGT, which is a large chain of supermarkets that we have all shopped at many times before. Today, the retail giant had a blowout earnings report. Revenue grew at an astounding 24.8% on a yearly basis, as the company had quarterly revenue of $22.98 billion, which beat estimates by nearly $3 billion. Non-GAAP EPS beat by a huge $1.74, as the company had a gain of $3.38 per share. Comparable sales completely blew out estimates, and digital sales exploded upwards by 195% on a yearly basis. To add even more fantastic news, EBITDA grew by 77% year over year. These phenomenal earnings led to great action for shares, as they gained 12.67% on the day. Next up, we have Lowe's, ticker symbol LOW, which is a retail chain that focuses on home improvement. They also reported a double beat. Non-GAAP EPS was a positive $3.75 per share, which was better than estimates by 80 cents. Revenue soared for an increase of 30.1% on a yearly basis, as consumers placed a large focus on their home during the pandemic. Revenue tallied $27.3 billion for the quarter, which came in above estimates by $3.06 billion. Again, comparable sales blew by estimates. On the earnings call, executives said that August is seeing comparable sales growth close to July's pace, while for the back half of the year, Lowe's expects revenue growth to moderate from the first half and promotional activity to increase modestly. Shares had a slight gain of 0.23%. Next up, we have TJX Companies, ticker symbol TJX, which is a chain of off-price department stores. This morning's earnings were not great. GAAP EPS was a loss of 18 cents per share, which was worse than estimates by a considerable 8 cents. Revenue fell 31.8% on a yearly basis, but they still managed to record revenue of $6.67 billion, which was better than estimates by a slim $90 million. Their home goods brand did perform well, as it managed to offset a majority of the decline in TJX's other brands. Overall, investors were not pleased, and shares fell 5.38%. Next up, we have Analog Devices, ticker symbol ADI, which is a semiconductor manufacturing company. This morning's earnings beat estimates, but they were not anything special. Non-GAAP EPS was a gain of $1.36 per share, which beat estimates by only 7 cents. Revenue fell a small 1.4% on a yearly basis, as they still managed to collect $1.46 billion in revenue, but beat estimates by a pretty insignificant $30 million. Company guidance for the fourth quarter did come in higher than consensus estimates, but not by much. Regardless, shares posted a slight gain of 0.23%. Lastly, we have Nvidia, ticker symbol NVDA, which also happens to be a semiconductor company and is considered to be one of the deemed FANG stocks. Nvidia had great earnings, as predicted. Non-GAAP EPS was a positive $2.18 per share, which topped estimates by 21 cents. Revenue was the real winner, as it grew 50% on a yearly basis. This comes as revenue totaled $3.87 billion and beat estimates by $210 million. Shares were in the red after hours as expectations surrounding their earnings were extremely high. That is all that I have for tonight. Hope you all enjoy the rest of your evening. As always, if you enjoyed, please leave a like and subscribe. Let's talk about the news in the comment section as well. Thanks again, and I look forward to seeing you again tomorrow.